Hello, I'm William and this is Abraham for PropertySold.ca. Today we're talking about credit scores, specifically how to repair your credit score and how to prepare your credit score. Abraham, you're the expert, you're the mortgage agent. You want to take everyone through their credit score?
Yeah, thank you very much. Credit score is something that banks really look closely at when it comes to qualifying you for a mortgage. They want to know that you have the ability and the willingness to repay your mortgage, and it's all reflected in the score and how your credit bureau looks. Preparing your credit score for a mortgage approval is kind of key. When you know you're going to buy a house, you're going to have 3-4 months maybe in advance to the actual purchase to get things ready, down payment, all the other things. And your credit bureau is one of the things you got to look at. You can get a free credit report from Equifax or TransUnion. That's free of charge. They'll send it to you. They'll tell you exactly what is positive and negative about it and what your overall score is. You want to look for a score above 650, above 680. Around there is the cutoffs for the banks.
Okay, important note though, if they contact you, can you get their credit score for them?
I can get your credit, yeah, definitely.
Okay.
I can do that as well as a mortgage agent, you're right.
Okay.
And the benefit of using a mortgage agent is, well, we can decipher the credit score for you, decipher all the different aspects of your credit bureau, tell you what's positive, what's negative, what you need to do. But as a short primer, here's what you got to do. First of all, to increase your credit score, you want to make sure that you keep your balances on all your debts, except for loans, mind you, below 50% of the allowable limit. So lines of credits, Visa cards, keep it below 50% consistently. Okay. That is one key.
Allowable limit, so if your credit, if you have a credit card and your max limit is $5,000, you want to keep it under $2,500?
Keep it under $2,500. Okay. Make your payments, yeah. The most important, of course, is make your payments. Make sure you do your payments on time. Yeah. Don't miss it. 30 days doesn't sound like a lot, but it does get recorded on your credit bureau. And that's something the banks look at. That's willingness to pay, right?
Okay.
Willingness to pay. The other one, we talked about the balance and limit. That's ability to pay. If you're above your 50%, you really can't pay your debts down to a reasonable level. It looks like to the bank anyways.
Okay.
So keep your levels below 50. Make your monthly payments. Don't do too many credit inquiries. Don't be shopping around for Visa cards and lines of credits just before your mortgage application, because that does score. It doesn't affect you a large amount, but it does affect your score as well.
I had a friend that actually really affected them. Yeah. They went to bank to bank to bank, and by the time they got to their fourth bank, each bank had done a hard check on their credit score. They said they had bad credit. And this is someone who's always paid off their bills and never had any trouble.
Yeah, the credit bureau scores, sometimes they're not accurate. They reflect things that are just not, like things, for example, credit checks. Everything else may be perfect, but the credit score is low because of the credit check.
Okay.
Mortgage agent, we pull one credit check. We use that credit check for all the lenders, right? So we can save you all those hard checks. We do the running around for you from bank to bank anyways. We save you a lot of time, energy, and, of course, the credit score. So definitely talk to a mortgage agent. We can definitely help you there. So those are the things that you really want to look for when preparing your credit bureau. Now, repairing.
Okay.
Pay off any outstanding collections. If you have any judgments, pay them off. The banks don't want to see them there. If they see a collection there from Scotia and you're applying to TD, how the banks keep the clients honest is, well, we're not going to lend you money until you pay off Scotia. It's a different bank, but they know that Scotia is going to do the same thing for them.
Now, does it matter how long you pay that off before you go get a mortgage?
The longer you have between the time that you paid off your collection or judgment, the better your score, the sooner your score will increase back up to the level it's supposed to be.
Okay.
So pay it off as quickly as possible. You may not want to pay Rogers because they screwed you on your cell phone, but you have to pay it. You have no choice, or make arrangements to at least get it removed off your credit bureau. If not completely removed, at least paid.
Okay.
So those are the key things. After something like a bankruptcy, you want to try rebuilding your credit. Go as quickly as possible after your bankruptcy is discharged, and try to get yourself a Visa card, even if it's a secured Visa. $500 secured Visa, you put $500 in the bank, they give you a limit of $500. No one's losing here because the money's there, but it does start repairing your credit. And as time goes on, you're going to want to try to get other cards as well. The banks want two pieces. They want a loan, a line of credit, or a credit card, but they want two pieces of it, and they want it for 2 years. That's their ultimate ideal numbers.
Okay.
So look at rebuilding your credit. You can get mortgages, even though it's less than 2 years, whether you're new to Canada, whether you're new to the credit game, or whether you just come off a bankruptcy. But you want to get it up to 2 years because, of course, when it comes to specialty programs, interest rates usually higher to accommodate.
Okay.
So that's how you want to start repairing it. Pay off your judgments, pay off your collections, and, of course, make sure your payments are done on time and bring those balances below 50%. Yeah.
This is William and Abraham for PropertySold.ca.